The same way that Ukraine war has been going on for the last 2 years, we have forgotten that there's a Ukraine war.
It's a non-event now.
Hopefully now soon we will forget that there's this war also. Trump tries to remind us every day, but there is that. And tomorrow there will be something else. I'm sure there will be some Cuba, there will be some Greenland. I don't know. So many things will be there. Maybe this is me being colored by my experience, but if the knife is pointing downwards, you don't try to catch it. There is a reason why you don't do that is because you hurt your own hand. And it's possible that the knife keeps going down further even after you've caught it or try to catch it. Second part is this applies to AI today, that it is falling. People are trying to catch it. So I would say more opportunities exist in India. The natural sectors it seems to have found now, and where in July 2026, it seems to be the to some extent, some of the mid, some of the industrial companies, very in fact dwindling quantity of the metals packs and all that stuff. Every area of the industrial machinery segment will probably see a massive set of.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Hi Deepak, so good to have you at our office. Thank you for the session. So let's have a normal market chat based on current market conditions. So is it time that we breathe a little freely, or already again we are getting the uncertainty back? So what does it say?
So, I mean, Krishna, honestly, either you're a free breather or you're not a free breather. If you're not a free breather, there is always something to worry about because something or the other will happen. And if you're a free breather, none of this matters to you. So, if you're, what I would generally say is, if you're investing into funds and you have a long-term thought process, you don't really need to take money out. All this should be considered entertainment. It's like going to a casino, you spend money. You don't go there to earn money, you go there to spend money and then you get entertained. You go to a water park, you spend money, you get entertained. So all this news around some Trump said something is entertainment, right? It is when you have to make a living out of, like we have to do that, something he has said and something opportunity has come, we have to analyze this opportunity and see whether it makes sense for us to invest in something else. That is our job in that sense. And we have those daily jitters every day. And I'm sure you do also,
Yes,
because now you have to
of course.
explain this to people.
To do that.
But I think this free breathing is very important. So say, breathe freely. It's okay. Whatever all this is entertainment, don't link it to your portfolio. The people who are managing your portfolio should be the people who are worried about these things. I don't think we will start worrying less. 6 years ago, there was Brexit. 3 years ago, 10 years ago, there was demonetization. Then there was COVID and there was something else. After all of this, we come out okay. No? And no matter what happens, we seem to be coming out okay after the last 20 years of all the things. Yes, we will suffer a couple of years, and almost no chance that we can predict when that suffering will stop or when the next suffering will start, right? But at best, you find the right businesses, you have the right strategies, you use your discipline to work with those strategies, and then you'll come out fine. That's my normal belief. But right now, things look like there's a war going on. Maybe there is a war going on, maybe there's not. I don't know. The answer to this is when you post this video. So, right? So, and then the same way that Ukraine war has been going on for the last 2 years, we have forgotten that there's a Ukraine war.
It's a non-event now.
Hopefully now soon we will forget that there's this war also. Trump tries to remind us every day, but there is that. And tomorrow there will be something else. I'm sure there will be some Cuba, there will be some Greenland. I don't know. So many things will be there. But I think we should just look at clearly whether our companies are growing, showing great results. Which of these companies is a better bet compared to the others? Those are choices we can make and hopefully, build ourselves.
Great. So now, one side you have the AI stocks tumbling double digit, negative 20%, 15%. Another side, we have our markets, which look relatively better than the last 2-3 months. And now if I were an aggressive investor, have these two choices, nibble into an AI stock which is already down and probably the prospects are still there. And another side, you have the domestic fund options. And if these two are the options, which one would you suggest?
So, and maybe this is me being colored by my experience, but if the knife is pointing downwards, you don't try to catch it. Okay, there is a reason why you don't do that is because you hurt your own hand, and it's possible that the knife keeps going down further even after you've caught it or try to catch it. In every market, there are periods of euphoria, and then there are periods of absolute despair. In the middle, there is usually periods where you ask yourself questions. Now the questions in my mind, hey, this stock was doing so well, it has done 19x its earnings in 1 year. How come it is going down? The reality that you know that it is going down. The reality of it is the market is telling you that I'm taking it down. It may be AI, it may be non-AI, it may be hard disk, memory, whatever it is. When in the face of good news, the market takes a stock down, do not try to catch it. That is the only rule that I follow in the face of good news. If the market, face of bad news and the market takes a fall, you can make a more reasoned assessment of, oh, maybe it is not so bad and all that. But when you have good news and market takes it down, you should never ignore this. Never try to catch it. Wait, because there's somebody who knows more than you. Second part is this applies to AI today, that it is falling. People are trying to catch it. Instead, does India look better? India has good data, but it's not going up. To that extent, it's in fact going down also some things but not meaningfully down. So good data and not going down but not going up also throws opportunities. Sometimes these opportunities will be in your face and visible and you'll be like, oh, it was very boring, but why should I buy it? But on the other hand, there will be some places where it is exciting because it's growing a lot and still valued very richly. This is where you want to make a distinction saying good data, good market is the stock good enough for me to purchase and go. So I would say more opportunities exist in India. Not saying that more opportunities don't exist abroad, but I don't have the capability of analyzing a lot of US stocks or Korean stocks or Taiwanese stocks. In fact, beyond two Korean stocks and one Taiwanese stock, that market is nothing. There is not that much in there, right? So I would say it makes a lot of sense for us to look at the growing economy of India and then kind of bet on that. I know it's not very fashionable nowadays to invest in India, but sometimes you do the non-fashionable things.
Correct. So now, if the decision is to invest in India, which are the sectors which look appealing to you now?
So as a natural consequence of our modeling, which don't tell use this sector and use that sector, it finds stocks. The natural sectors it seems to have found now, and where in July 2026, it seems to be the pharma pack to some extent, some of the mid-cap banks, some of the industrial companies, and very, in fact, dwindling quantity of the metals packs and all that stuff. Now, what does this mean to me is like, is there a fundamental reason why only these stocks seem to be coming up? I think there is a lot of momentum that is on that side, but there's also that seems to be that this is the place which seems to have the maximum impact of the rupee fall because the pharma exporters will make money. The mid-cap banks, because of the rise in capex in India and 18% credit growth after nearly 10-15 years, we are seeing that come back, and that's something that's happening. A layer around industrialization, which is primarily because India is moving more towards domestic production, whatever we use, that's also going to happen. This is a post-facto analysis because my algorithms already said that this is what we need to buy, but it's not because of these reasons that is decided to buy it. I am kind of post justifying it, but I'm telling you that this is where I think there's a lot of scope in India. Every area of the industrial machinery segment will probably see a massive set of growth. So will defense, so will perhaps chemicals and some parts of pharmaceuticals. We will see a lot of very interesting things. I would say that is where your the scope of growth is. So if you're very excited about growing companies, that's what it is. If you're not excited about growth, you want dividend yield, there's another set of companies. But there I say India is not the best. Only if you want growth do you want India. Because if you want cash flow and all that, there are companies in Singapore that trade at 10% dividend yield or 6%, 7% dividend yield in Singapore dollars. Maybe that's a better bet. But if you want growth, where a company becomes 10x, then I think that is where India.
That's variation happens.
Wealth. Well, so you see, it's not easy to create wealth. So when you create wealth, you may have to bet on 5 or 6 companies, lose money in 2 or 3, and make a lot of money in the others. That's the only thing.
Now, if there is an investor sitting on the sidelines, if he had this money in February, the war threatened him, he did not deploy, and now he still is there. So now lump sum or STP 3 months or STP 6 months.
So there are 2 answers to this. There are only 2 answers, and no matter when you ask me, there will be 2 answers, lump sum or SIP, right? I don't think I want to give you the rational answer. The rational answer is mathematical. I calculate, I say, oh, if you had done a lump sum in the past and then you did SIP, what would be better? I found out not very different. You could do both, which means you should do lump sum. I said, no, that's not the way to look at it. The way I'm trying to optimize, the guy was on the sidelines for a reason. He was feeling, I don't want to lose money. The feeling is emotional. I want to optimize for that emotion. If I want to optimize for the emotion, always SIP, STP is a good idea. Put your money into a liquid or arbitrage fund, do STP every month into the equity fund that you want. This saves you from the vagaries of the first 6 months or to a year. You know, your most unlucky is if market keeps going up and you've done this, right? So you've actually gotten into a rising market. But since there are two other markets, rising, flat and down. Flat market, you're fine doing SIP. Down market, you're actually good doing SIP. So given that two of the markets you're in better shape and one you're not so great, and that too it has to be linear rise. It cannot be like a wobbly, because wobbly means you've gotten it at a different point. So I would say in general, anybody who has this, I didn't deploy because I was scared, you should just always by default say STP was. There is no, and risk appetites matter. So it's not like I'm telling everybody to participate. Once you have a risk appetite that matters, then it's your emotional, it may be invalid fear. Because I mean, people do STP for 50,000 rupees when their portfolio is worth 50 lakhs. So I'm like, what are you going to get for STP 50 lakhs? But no, that is how the person's comfort is. So he's going to 50 lakhs, he's doing 5 deposits of 10,000 each, 50,000 rupees. So it's not that I'm trying to optimize for his return, because otherwise I would have told him it makes no difference. The second part that comes is how much of your portfolio is already invested. So if you have 1 crore invested in the market and you have 5 lakhs sitting there and you haven't deployed that 5 lakhs, you know, if the market falls 30% or 20%, you lose 20 lakhs on your 1 crore invested. These 5 lakhs is irrelevant. But you are not thinking like that. You're thinking, what is the right time to deploy that? Again, STP is a better option for an emotional perspective. I won't say, don't think logically here, think emotional.
Great. Thank you. I think we have covered whatever is more relevant in the current market situation, and that was the intent of this chat. Thank you so much.
Thank you, Krishna. I wish you all the best. Thank you.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.